Hey everybody, could you please confirm that you hear my voice and you see my screen? I believe we should be ready to get started. I just want to confirm that this is the case. Give me some confirmation, guys, please. A quick yes in the comments box would do, so we can begin. Just logging into TradeStation. Yeah, perfect. Wonderful, guys. Good. So let me get the slides here and we can start our session today. We're starting with a little bit of delay here. I was doing some experimentation on my side. There are some parameters to play with the delays and stuff like that when streaming the video, and I just wanted to find check a couple more settings, I should say. So sorry for that. It took me more than what I thought at the beginning. But anyway, I had to satisfy my curiosity, guys. Anyway, ready to get started. Today it's 26th of March 2019, Tuesday. Most of the Tuesdays we are doing short-term trading, so welcome to the get together short-term session. We're going to be using our beautiful magic UFOs combined with other things and looking for trade opportunities, execute them together, and grow ourselves and our accounts as much as we can in this 1 hour in front of us. Okay, before we start, disclaimer, here we go. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Here we go. So we had the disclaimer out of the way, and therefore now it's time to jump into TradeStation, which I was logging in a second ago, and we're gonna start planning for trades. Okay. So while TradeStation is loading, I would like to bring the get together calendar here very quickly to talk about what's coming. Okay. Because we have been conducting up to this time 7 sessions in a row over Sundays. You probably know that Sundays is our sharpening days, correct? So over Sundays we have been conducting multiple sessions. I believe, to be precise, it has been 7 sessions in a row where we've been talking about options and looking from the very beginning what is an option all the way to doing spreads, debit spreads and credit spreads. Okay, and there is much more to cover there when it comes to options, but before we get deeper into options trading, what we will want to do is to change topic, and it's not going to be this Sunday. This Sunday I'm going to give you a little bit of time for rest. Okay, it's been intense all these past Sundays, but the Sunday after, which is going to be April 7, let me rephrase that, April 7, we're going to go back to sharpening. And the reason why I'm mentioning this, even though April 7 is far from today, it's because we are going to start getting into futures. And I want to make sure you understand that up to this point, everything that we have been doing in the short-term sessions on Tuesdays, obviously we've been doing things that are interesting, and obviously some of our trades profited and obviously some of our trades didn't. But up to this point, my main priority conducting these sessions have been keep it as simple as possible, because in this group we are a diverse group of traders where some of you have traded futures before, some of you haven't, etc. And basically the only thing we have been doing has been to use a specific time frame, let's say 2-minute time frame above, and combine it with the one below, the 15-minute time frame, and that's it. Okay. And by the way, some of you with very nice emails, you have been reporting to us that you've been profiting from that strategy, and it's created an impact on keeping it very simple, using a little of your time only to trade, and that makes us very, very happy to see that some of you have enjoyed and end up actually profiting from the strategy, not only the fun but also the money, right? So that's great. But my point, and going back to those sharpening sessions, is that starting April 7, we're going to start getting deeper into futures. We're going to get into more rules. We're going to get into time frames that are not time-based. We'll start talking about how to properly use the volume time frames, how to properly use the tick time frames. We're going to start getting much more specialized. So I would expect that after 2 or 3 of those Sundays spent together going over futures properly, we're gonna kill it in these Tuesday sessions when we do short-term trading, because we'll be equipped with many more tools that we haven't had the chance to explore yet. Okay, so exciting times to come. You guys get ready for that. Organize your Sundays so you have a little bit of time to join us. Okay, and spread the word to your traders friends that you know, are struggling in trading or are open for improvement and other ways on how to look at trading, because as I said, we're gonna do stuff that is quite powerful. Okay, but anyway, so let's begin. In the Tuesday sessions, we've been using these three combinations above my notes here, where we have been combining the 15-minute time frame with the 2-minute time frame, the 60-minute time frame and the 5, the 4-hour time frame and the 15. Okay, and this is what we're gonna take to the next level little by little. But for now, we're just gonna leave it like that because it works, so it's okay. So what are we gonna do? Well, remember, for the 2-minute time frame combined with the 15, we cannot apply this to spot Forex. Okay, so we're going to apply the 15-minute time frame and the 2-minute time frame. We're going to apply this combination of time frames to equity index markets such as the Nasdaq index and the S&P. We could certainly talk about crude oil, natural gas, but we will not do it until we go deeper into those sessions on those Sundays. Okay, so we're gonna keep it simple for now, and we're just gonna go over equity index markets with the 15 and the 2, and then we'll move into the 60, the 5, and the 240 and the 15, and then we'll continue looking at the equity index markets. But together with that, on top of that, we will also add a bunch of currency pairs, looking for those trade opportunities. Okay, that's the plan. So I see your comments out there. Very nice, guys. Okay, good. Okay, so let's go for it. So let's begin with the S&P. Okay, and by the way, in less than 1 minute. Okay, so I'm just gonna wait because it's less than 1 minute. It's actually 20 seconds from now. In 20 seconds from now, or actually my computer clock is different than the Chicago exchange, so actually the clock of the exchange in Chicago already ticked, so a new candle just formed. And the reason why I was looking at this, because in the 15-minute time frame we are looking at the trend direction. So the average was 28.19, the close was 28.20, so we closed above the average. Okay, we closed above the average, therefore technically we are in an uptrend on the S&P. And what we would want to look for with our methodology here, we would want to look for green UFOs located around 28.20, which is the average. Okay, and you know, the one that we have here, okay, unfortunately it's not exactly 28.20, it's more around 2019, something like that. Okay, so we're gonna have to wait. Remember, every time I ask you to wait, you know, I understand that we don't like to wait. I don't either, but every time, remember, it's gonna be 3 times the duration of the smaller time frame. So if the smaller time frame is 2, 3 times 2 equals 6. So we're gonna come back in 6 minutes or less, review this chart, because a new green UFO may have formed around 28.20, and then we would take the trade. If not, we're just gonna keep waiting and reviewing these every 6 minutes. So what I'm gonna do, since I don't have a trade now for the next 6 minutes, is move to the Nasdaq. So NQM19, that would be the current front month expiration date for the Nasdaq futures. I'm using the specific symbol. And what do we have here? So we have a close. The close was 93, the average was 90, so we have a close above the average. We are in an uptrend, so same story. We are looking for, in this time frame, we are looking for green UFOs in the 2-minute time frame, somewhere around 73.92. That would be more or less here. Okay, but what's the problem? We don't have any. Okay, so we just need to wait, and again, we're gonna wait up to 6 minutes and then go back and check. So since we didn't find anything to trade right now as we speak, in the combination of time frames 2 and 15, we're going to switch the 2 to the 5, and we're going to switch the 15 to 60. Okay, we're going to switch the 15 to 60, and the 2 becomes 5. And therefore, now we are looking at the next combination, 60 and 5. And now we're going to spend a few minutes looking at the equity index markets, but also now we can also look at Forex currency pairs. So in the 5 and the 60, again, looking for green UFOs located more or less around 73.83. This is more or less at this level, and at that level we got nothing at the moment. Okay, so we're gonna have to wait for something to form on the 5 and the 60. Okay, so what do? Let's move back to the S&P ESM 19, and the moment we do that, we got the same scenario. The prior close was above the average. The average is 28.17, so we're looking for green UFOs around 28.17, and as you can see, we got nothing. Okay, so what do? Okay, so this is the time now where now we start looking at the currency pairs. Okay, did I went too far there? Yeah. Okay, now we're gonna start looking at the currency pairs. All right? Okay, so what do we have? Let's begin with the euro. Okay, let's begin with the euro. And the euro is in a downtrend. Okay, the euro is in a downtrend. The prior candle closed below the average. The average it's currently 113.05, and this is something I'm liking very much because we got 113.05, which is lining up with this beautiful red UFO. We also know that as the euro comes back to that UFO, so we can take the short expecting it to continue falling, continuing the downtrend. This moving average will, in one hand, continue going down because it's a downtrend, but in the other hand, as the euro is coming back towards the red UFO above, this moving average may turn a little higher, and therefore, even though currently is 113.05, it may become 113.07, 113.08, something like that. What's the good news? Well, the red UFO we have is ranging all the way from 113.05 to, let's call it, 113.15. So in other words, we got wiggle room for that moving average to fluctuate a little bit, but if the price of the euro goes up and hits that red UFO, we have exactly the type of setup that we're looking for, which is a confluence with the UFO and the moving average. So you have the on-field orders waiting for you to get filled, which is the red UFO, but together with the on-field orders that are already in the market, we have an extra potential for new on-field orders to be added by computers that trade moving averages. And therefore, apart from the current on-field orders, we may have added on-field orders after you enter the trade, and that is potentially going to help you very much. Okay, so that's the setup we're looking for, which happens many times a day for all markets. Okay, so we're gonna go ahead and plan a trade on that and execute it. Okay, now since I got a little bit of distance from 1290 to 1305, I got 15 pips, and normally it would take at least a few minutes to get there, and I said that I wanted to check the equity index markets every 6 minutes. Okay, so I'm gonna very quickly check the 2-minute time frame of the S&P and the Nasdaq to see if we got, here we go, we got a green UFO that just formed. Okay, we got a green UFO that just formed, so maybe we can plan a trade on the Nasdaq or the S&P first, and then we can go ahead and go back to the euro. Okay, so what do we have? I'm back to, hopefully I'm not confusing you guys, 15-minute time frame below, I'm back to the 2-minute time frame above. Okay, remember we said to review this every 6 minutes. What do we have? We have a new UFO that formed that was not there 6 minutes ago, but now is there, and the price of this UFO goes all the way to 2820, which is our average. Okay, so I'm liking this. Okay, I am liking this. I would like it to be just a little below, like 2819, something like that, and 2820 on top. It would be amazing. Unfortunately, 2820 is the very, very bottom, so you know, I'm not super, I mean, I'm comfortable enough to take the trade, but it could be better. So I'm gonna check the Nasdaq to see if the Nasdaq gave me the UFO. So the Nasdaq didn't give me the UFO, so if I was going to take the trade, it has to be the S&P. Okay, so a new UFO just formed. This one we're not going to use it because it's a little too high, and therefore we're going to rely on the bottom UFO. Okay, so let me load ESM19 on the matrix, so we are ready to execute a trade here. I'm going to go ahead and enter 2 contracts because I'm going to be using 2 targets. Okay, yeah, so here we go. So this would be 2821. Okay, so I'm just gonna, since the average is a little lower, 2820.5, so instead of entering at 2821, I'm gonna enter instead of entering at the top, which is 28, 21, 25, I'm just going to enter at 28, 21. I said it, sorry for that. I am entering this trade with an attached OSO there. Okay, so I got a bracket order. Now notice that it says one limit, one stop. I don't want that. I want two limits and one stop, because I'm going to have two targets. Okay, and my entry is going to be 28, 21. Okay, so I'm just clicking here to place the order. The order is in the system. I will want to adjust my stop to be 19.5. That is giving me 1.5 of risk, so 22.5 would be my target one, safety target, which is 1-to-1, mathematically calculated. And now I'm gonna go ahead and look at the target. Notice I did the entry before the target because I'm pretty close to price. The market is gonna open in 7 minutes from now, so I don't want to miss it. Okay, and that's why I was a little bit of rushing placing the entry so I don't miss the trade. And now I'm gonna go ahead and look at the target. In a perfect world, you had time to do everything before, but at the same time, as I said, I didn't want to miss the entry. Okay, now one more comment. When you do trades like that right around the open, two things may happen, and you need to be happy with that for you to take the trade. If you're not happy, please don't take it. So two things may happen, which is normally right at the open we have a peak and excess of volatility, and therefore two things normally happen. It's either you start moving and traveling towards your target quite efficiently, and that would make you very happy, or you may get stopped out at the speed of the light. Okay, and if that's the case, you know, it's a bitter taste if you wish, but at the same time it's the price to pay to be able to catch one of those very fast move at the market open. Since the risk is going to be low compared to where our target is, I particularly am very okay taking the trade. But again, some of you may be less experienced or maybe a little more conservative, etc., etc. So guys, there is nothing wrong. It's your trading rules should be compatible with your personality, and therefore if you don't feel comfortable with the trade, please don't take it. Okay, just know that in my case I am taking it. We are about to get filled, by the way. We are you know, one tick away from being filled. So the target that I see here in the 5-minute time frame would be located at 33. We just got, okay, 33. So I'm gonna move my final target to 33. Okay, that's gonna be the final target. Okay, let me zoom back in here, 2-minute time frame. Here we go. So price just came into our green UFO. We are more or less lining up with the moving averages you can see below. We are in the trade. We have our stop below for 2 contracts, and then we have a target pretty close. You know, in a normal case, you would hit that target quickly and therefore remove the risk of the trade. Bad news, guys, a red UFO just formed. We didn't have time. We didn't have that earlier. Hey, this is trading. We don't have a crystal ball, and therefore the crystal ball here is going to be our stop, where if in the end that red UFO pushes prices down, we'll be well protected. Okay, and as you have seen, we have our final target located all the way here at 33, which can be seen much more better here on the chart. In this place on the chart. Okay, so again, entry, we have it already, we just got filled, is right there. The stop below the UFO. Target one, this is what we call a safety target. This is only for us to take half of the money out of the table, and therefore if the market was to, after reaching our first target, was to move against us, you could not lose anymore. That's why I'm calling it a safety target, and the final target is located all the way there. Okay, so well, actually we already reached our first target. I was freezing the screen, you know, out of you know, being able to do those annotations, and it's a shame we didn't get to see the first target being hit, but as you can see, we have already. You can see the little purple arrow next to my mouse cursor, and that means that that's it. We are now in a risk-free trade. Okay, again, the trickiness I was talking about is still present. Good news, we just eliminated the risk of the trade out of the beginning. It's pretty nice, it's pretty efficient, it's cool. But again, this peak of volatility is gonna kick in in around 3 minutes from now. By the way, not always. Sometimes the market opening is so boring. Most of the days you have this, this injection of liquidity. But there are days where you kind of get surprised because you expect it to start moving, and you are wishing for the market to start moving, and then it's doing nothing. And it's one of those boring beginnings of the day. This could happen too, okay? But most of the times, normally you would have a push. So again, we are still exposed to that push going against us. Good news, if the push goes against us, we're gonna lose 75, but because we already made 75, we would leave the trade for break even. Okay, if you tell me, hey, I'm super risk averse, I'm happy that raise safety target, and you want to move your stop to break even, you could certainly do that. Personally, I'm not a fan of that. If you have seen me trade in other sessions before, so I'd rather leave the trade alone and let this thing happen, because we may get to 28.33. And if that's the case, you just made a fantastic trade. And because we are now in a risk-free environment, it's not like I'm going to do nothing for the rest of the day. What I'm going to do now is plan other trades with other assets and execute other trades. But that one, is now risk-free, okay, which is a nice peace of mind if your trading psychology is like mine, okay? That resonates very well with me, and we are all different, okay? So I'm just going to wait like a minute and a half before the market opens, okay? Because of two reasons. Remember, every 3 candles we may have a new UFO that forms. So if a new UFO was to form, that may give me the opportunity to move my stop. So I would do it right before the open. I'm not gonna move it just because I want to move it. I'm gonna move it only if a UFO is formed. So that way I make myself mechanical and rule-based, okay? And so I'm gonna wait for the market open so we get to see it, and then we'll forget about the trade for the remaining part of the session, and then we'll go plan other trades, okay? So we are now waiting for 30 seconds, additional 30 seconds, and we will be, seeing the market open, okay? So 30 seconds, guys, and we're gonna be there. By the way, anyone with me on the trade? Anyone took it? I know I planned it quite quickly, okay, so maybe some of you were not able to do it, but hopefully some of you are. Orlando, you are in. Wonderful. Good job, my friend. Good job. Trading is all about business. Trading is all about being decisive. Trading is all about being in time, isn't it? Of course, you manage the risk. There is a very fine line that separates being decisive and improvise. We never improvise. We always pre-plan everything, okay? But improvisation, not a good idea, okay, guys? So anyway, so the market open. We are seeing a little bit of the push I was talking about. So we are not having any UFO forming yet, but if you think about it, in the prior scale out we made $75. Now we are making already double, but I haven't had an opportunity to move my stop. So what I'm going to do, I'm just going to mechanically move the stop 2 ticks above the open, okay? That's going to be a new rule that we'll discuss later on. I don't have a UFO. I need a UFO to move my stops, but since I doubled my initial profit on the trade and no UFO form, that also means that the market is moving a little too fast, and when a market moves a little too fast, maybe it's not gonna be sustainable. So therefore, one healthy rule for you to have is, if the market has doubled the initial profit that you have made, just move your stop to a break-even position. That way, now, I made 75 earlier. If I get stopped out, I'll make another 25. I cannot lose on this trade anymore. That's it. Okay, and again, I'm not saying it's an amazing profit, because we're shooting for $600 of profit up here. So I'm not saying it's an amazing one, but again, we always, as traders, we always need to look for this healthy balance between the size of the profits, the size of the losses, but also the probability of the winners, right? So it's always looking for this healthy combination, okay? Yeah, very good. I see that Bill is in the trade as well. Mario is in the trade as well. Loving it, guys. Okay, teamwork. This is exactly what I love. This is exactly what we're supposed to do. So again, notice how we are now again adding another almost twice the profit. Okay, so this market is moving in a parabolic stage. Okay, and that is always concerning. So I'm gonna trail this thing all the way to my initial profit, which was 75. Okay, why? Because we hit 300, which is, you know, my initial profit was 75. My second, when we hit 150, I move my stop. When we hit 300, I move the stop again. Okay, why? Because that market is moving too fast. Again, it's very nice to see the green kicking in at that speed. It's you know, it brings that joy, isn't it? But again, the concern of a trader is always to manage the risk, and when something is moving too far too fast, it may not be sustainable. Okay, so again, always balancing out those trading decisions. Okay. Marcus, the T2 was determined by looking at the 5-minute time frame in the continuous symbol. There was a red UFO at 28.33, yeah. So that was the reason. Okay. So yeah. So guys, look, we're gonna move back to the euro. We are in this nicely profitable trade here. So really, it's nice to watch, but at the same time, there is not much to comment. So let's look for more trading opportunities. So I'm gonna leave this one running in a couple of, in like 4-6 minutes. I'll come back to see if a new UFO form and I can move my stop further. Okay, but in the meantime, let's go back to the combination we had before. That was the euro. Okay, where we had the 5-minute time frame above, and we had the 60-minute time frame below. Okay, that was the combination that here. Okay, so what are we planning to do here? Well, here we are planning to short. Okay, why? Because again, the euro was in a downtrend, not in an uptrend like the broad market. The euro has the red UFO, which is sell on field orders. So in this case, the trade would be a trade where we're gonna have to set up some sort of a protective stop above the UFO in case it goes up, because our plan here will not be to go long. Our plan here will be to go short. So we'll be setting a short entry where the UFO is, which is a price level 113.05, lining up with the moving average below. Then we'll have our beautiful safety target somewhere below. So safety target, okay? And below the safety target, we're gonna have our final target, okay? Which I need to determine where that final target will be. Okay, so let me go ahead and instead of the light blue, make it darker blue, so it's easier for you to read. I'm gonna zoom out all the way to see if we got green UFOs in the euro. We don't have green UFOs in the euro. So which means that from 5, I'm gonna move to the next classical time frame, which is gonna be the 15. So shooting for the 15 time frame, we have no green. Shooting for the 60-minute time frame, we have green. And the green is located at, oh, okay. Oh, got it. I have a box, you know, with text from the other day. I forgot to delete it. So that would be 112.46. Okay, 112.46. That would be the price, 112.46. But remember, when you buy from the ask. And spot Forex, okay, spot Forex is a market that doesn't trade in an exchange. It's a decentralized product, and therefore we need to look at the EURUSD.A, which is the symbol for us to double check the ask price of this particular currency pair. And notice how around this price level, it seems that we don't have a UFO here with significant on-field orders. So this will force me to change the settings of my UFO to false for the parameter hide hit UFOs, because again, I don't want to use a target that is that far away because it makes me a little bit too much of a hopeful trader. Okay, I don't want to hope. And here we go. Here is the one that we are looking for here, which is lesser probability with the EURUSD.A symbol, but it does show up when you change the settings. So notice how the top is 112.48. Okay, 112.48. That is the top. Okay, and therefore I'm gonna go back to the normal settings with true for hide hit UFO. 112.48 was the value, so I'm quickly switching to the Euro USD, back to the 5-minute time frame, and my final target here, I'm just going to input 112.48. Okay, now let me save my chart here. I don't want to drive you, but I told you that I would go back to the S&P to see if new UFOs have formed. Some of you are in the trade, guys, even though the trade has no risk anymore, so I would like to look at it. And in the 2-minute time frame, let's see what happened in the 2-minute time frame. Yeah, we still have nothing that formed. We have our stop right here, but nothing has formed at this price level. Okay, so let me see. This is 2-minute time frame, so the next candle will close, yeah, like in 2 minutes more or less. So hey, I'll come back in 2 minutes because it seems that the price action here is kind of pausing. So if this kicks out to the upside, probably we'll have some sort of UFO forming here, some imbalance of buy orders and sell orders, and I would like to double check that in kind of like a couple of minutes. Okay, so let's go back to the euro. Let's continue planning the euro trade, and we'll come back. And guys, this is multitasking. Hopefully, as I said, I'm not driving you too crazy, but at the same time, this is the life of a trader. Okay, we deal with multiple charts, and I want to make sure that you all understand that. Okay, so the short entry would be this red UFO, which is 113.05. Okay, so beautiful price lining up with the average. The top was 113.15, right? But that one is going to be a buy order, correct? Because it's a stop. So I'm going to have to change this to EURUSD.A. Okay, EURUSD.A, and that will give us that UFO where we can see the top is 113.16. Okay, you guys see that? 113.16 right here. You guys see it? Okay, so even though the USD without the A suggests that it should be 15, the EURUSD.A suggests that it's going to be 113.16, and I'm going to add a couple more, so it's going to be 18. That's going to be my stop. Okay, but hey guys, back to the S&P, ESM 19 2-minute time frame. Okay guys, if I'm going too fast, please let me know in the comments box, because what I'll do later is to kind of re-explain everything I've been doing if I did anyone confused. Okay. Oh, I can see TradeStation, you had a little technical problem there. You know, for these situations, okay, let's learn from this experience. For these situations, what you guys always want to do is to have your TradeStation mobile app ready on your phone, set up with username and password and all of this, so you can, Orlando, you can actually manage a trade from your phone while you launch your your desktop application. Okay, so guys, we're having a little bit of a fight here. Okay, this market is staying too long at the same price. So at some point we'll have to talk about time stops. We'll have to talk about certain other rules. So I am moving my stop one more time to 150. Okay, so at this point, if this market was to go against me, I would make 150 with this one contract plus 75 I made on the other one. This would be a $225 profitable trade no matter what. Okay, so again, why am I doing this? At the beginning I moved my stop because it was moving too far too fast. Remember, when that's the case, things normally are not sustainable, but now I'm doing it for the opposite reason. It's just staying there and doing nothing. Okay, what does that mean? There is a fight between the buyers and the sellers, and we don't know who is going to win because we don't have a green or a red UFO on the chart. So anything could happen at this point, and our job as traders is to manage the risk, as we have said before. So I just added a little extra rule there, which I will detail with more detail when we do our sharpening sessions on Sundays, where I just had another opportunity to move my stop. Okay, and that's why the stop is now located at 28.24. Okay, good. Anyway, so back to the euro, guys. We have to plan a trade on the euro. Yeah, right now, John, London trader, I was not caring about the bottom chart at this moment in time. I was only looking at the upper chart. I was managing my stop. That's all I was doing. Okay, so you are right. I had the 2-minute time frame above, the 60-minute time frame below, but at that time I was not planning on a trade, so I was not even looking at the below chart. Okay, so not to waste too much time, I was not looking. Okay, so guys, so what do we have here? Well, we have, let me bring a calculator. So let me bring a calculator. So what do we have? We have a stop located at 113.18, an entry located at 113.05. So we have a risk of 13 pips for the euro trade, 13 pips projected below 113.05. This is 112.92. So our safety target is going to be located at 112. I think I forgot. Yeah, 92. I forgot the number. Okay, 112.92. And then the final target is going to be located much further away. Okay, so if I zoom out a little bit on this 5-minute time frame to give you a proper perspective, so you guys can take a screenshot because this is an actionable trade. Okay, we would have our protective stop 113.08. Our entry is here 05. The safety target is more or less 92, which is more or less there, and then 48 is more or less here. Okay, so this would be the plan for this particular trade. Okay, sorry, 18 is more or less here, 05 is more or less here, 92 is more or less here, okay, and 48 is more or less here. Okay, so this would be the trade for the euro. So everybody, guys, take a screenshot. I give you 5 seconds. We need to go back to the S&P because this is pushing. We may have a new UFO. We are making $500 per contract at the moment. There may be an opportunity for further management of the trade. So 5 more seconds for the screenshot, and we go back to the S&P. The very good question when it comes to let me change the symbol first. Difficult to talk and multitask at the same time. So 2-minute time frame of the S&P. Here we go. So yeah, it's moving again. Very strong push. No UFOs forming. Again, it's a dangerous one. Okay, this could get 2 ticks away from your entry, and then you get stopped out. Okay, so I'm just gonna push this all the way to 300. Locking in, even though, I mean, it's looking pretty good to reach our target. We are 2 ticks away from the target, guys. Okay, so everybody, okay, all together, blow the chart. Everybody blow at the same time, and we're gonna hit our target. Okay, we are right there. That's it, almost there. Come on, 1 more tick. Again, it's looking powerful, but at the same time, always be ready to do some management when a market is moving at such a speed, because we have a red UFO at that price level, and when price moves too far too fast, again, it may not be sustainable. Okay, so ready to trail more stop, here, because we are now maybe reacting to the red UFO that is located right there. So of profit, just squeezing this trade to leave the least amount of money on the table, if any. Okay, so yeah, so the question, what is the best setting when it comes to bars to eliminate freezing? So again, we're talking about a technology situation with TradeStation being a 32-bit platform. I love TradeStation like big time. I really love it, but we have this 32-bit core. We just need to be sensitive of that, and therefore the best way to eliminate freezes is to go for a very little amount of bars. In my case, I'm using 1,597 bars on my chart, and most of the times it works well. Sometimes I'll have a little hiccup. So if you really want to avoid those hiccups, especially after the Sunday session I was talking about, where we'll be using volume and tick charts and all of this, really, there is normally, especially if you trade in the direction of the trend, which is what we're doing here, there is no need for you to have more than 500 bars in the chart. 500 is plenty. So maybe you want to do this and see how your computer reacts, because again, every computer will have a little bit of a different reaction. Okay, I would say our experience, and also double checking all of these with TradeStation and their technologists, 1,500 bars should be okay. We have many cases as well of people using 2,500, but we also have many people reporting problems above 1,500. Okay, so the conservative number is 1,500. The very conservative number is like 500, and now you can forget about problems for sure. And again, because you trade in the direction of the trend, I mean, think about all this market data I got in front of me. If I was to measure how many bars I got from left to right, okay, all of this is 147 bars. So 500 bars is actually 3 times more. Okay, so it's plenty. Okay, it's really plenty. So again, not looking too good at this moment in time. Probably, and that's why I was moving the stop. Probably this turning price right here has a lot to do with the red UFO that was located above, and the reason why maybe we didn't hit the target and it turned right before, maybe as well, because since I was looking at the target in a continuous using a continuous symbol, because the ESM19 is a contract that started traded with volume not too long ago, and I had to go a little further in time to get a little more accurate data on the chart, because that red UFO was a little higher in price. So because of that, the big players in the marketplace, they do what is known in futures as rollover, right? If you're not familiar with that term, we'll talk about it in those Sunday sharpening sessions as well. And so basically, basically what happens is that you may have a little bit of differences in prices in different contracts and different expiration dates, and that may create a little bit of lack of precision for those UFOs that were created in other contracts. Okay, even if you go the route of using on adjustments, so you input manual settings and stuff to the contract, sometimes this will happen. Okay, so I believe this could be the reason, okay, why we had price turn right before. Okay, and now on top of that we have a UFO that just formed against us, located at 3275. So I'm just gonna move these down to 3275. You see, we just got hit, and therefore we are out of the trade. Okay, so congratulations, guys. Congratulations, very nice trade. I'm very happy in the sense that the one concept I was describing with words as the session started, which is to catch one of those trades right at the beginning and ride it all the way. That's exactly what we have done, with a very low risk, with a strong reward, with the proper timing, all of it. Okay, so we've done a good job here. So congratulations, guys, and good job for the ones of you following. We missed it by one tick, isn't it, Mario? This is trading, guys. This is trading. Okay, but you gotta keep your rules in place to act accordingly and not to get emotional. Okay, so now we're gonna go back to plan more trades. Okay, I don't want to let's say you got let's talk about trading psychology a little bit, because it's important. So let's say you got a little upset by the fact that you missed the trade by one tick. Okay, you cannot let this impact how you plan the next trade, guys. Okay, so we are here to be professional. We are pros. We're gonna trade millions of times in our life. Okay, it's just one trade in your life. You miss it for a tick, so what? Okay, so there'll be other trades where you'll have a gap in your favor and you'll make an extra profit that you were not expecting. So not a big deal, guys. Okay, so don't let any emotion impact you. Okay, anyway, so let's go for other trades. Okay, so well, this isn't a check on them anymore, because they have been moving very strong to the upside. So even if I look at the 15 and the 2, notice how my average now is located at 23 and I got nothing around 23. Okay, so when a market is moving too far too fast, the good news is that if you're on board, it's cool. The problem is that if you are not on board, you normally have a lot of waiting time for price to come to a reasonable price, which is an average price, and you also need to have a UFO. So I would say that we'll call it the day for the S&P and the Nasdaq, and the remaining part of the session we're going to focus on currency trading. We're going to focus on spot forex and look at other opportunities. Okay, since the one trade that we planned on the euro was a trade in the 5 and 16 minute time frame. Okay, so we were using the 5 above correct? And we were using the 60 below. So let me change the time frames now. 60. Here we go. Since we had this type of setup with the 60 and the 5 with the euro, so what I'll do, just to give you a little more diversity as well, guys, so you know you all understand all angles of trading, you know, I'm gonna go now for the 240-minute time frame combined with the 15 and do the same type of approach, okay, and get those trades ready, okay. Look, we started with the euro, so what I will do now is not to go back to the euro. We'll look at other currency pairs such as the Canadian dollar. Okay, so let's begin from the lower part of the list this time. Let me check the chat, the comments box as well. Yeah, Mario. Yeah, 475 is a good trade, especially because we're risking very little, isn't it? So it's yeah, it's the way to do it. So thanks for the compliment. But again, you know, talking about trading psychology, you know, it's even, and don't get me wrong, I love it when you compliment, okay, guys, don't get me wrong, but you know, it's even not really a need for us traders to compliment ourselves. Is that making sense? Because, you know, these things are part of trading. So you gotta make yourself a trader where anything that happens needs to feel normal to you, okay? And I'm just, you know, I'm sharing this type of concept with you guys, even though some of you may be thinking, Jose, what do you mean? Mario was so nice to you and you just tell him no need to compliment me? Yeah. Guys, we need to develop a professional mindset here, and trading needs to feel normal, so that way your emotions will not impact you as much. And you know, it's, I mean, as your instructor, of course I appreciate it very much, guys, okay. Don't get me wrong, I love it when you guys appreciate what I do for you, and on top of that you learn from it, and on top of that you make 475 I think we made in this trade. So it's you know, I love it, and if on top of that you compliment me, you make my day. But at the same time, what I'm trying to share with you is beyond you know, this normal human mindset. I'm talking about what is it to be a trader, okay? And again, we are people that we don't care about anything. You know, when we are in trading mode, when we are done with trading, you change your hat and then you are the most lovely guy in the world. But when you are trading, you don't care about anything. Everything needs to feel normal, emotionless. Is that making sense? So you know, I think that these sessions where we get together, apart from talking about trading and analytics and charts and technology and plan trades and execute trades, we should also talk about the mindset of a trader, because in the end we are the ones clicking the button, okay, guys? Anyway, so 15-minute time frame, you know, we got nothing here with the Canadian dollar, because you know the prior close is above where the current price is below the average, okay? So we got nothing with the Canadian dollar. This is not a market that is really trending in any decisive manner. Okay, so it's kind of like undefined. So what about the Japanese yen? You guys got so silent since I made this comment about everything has to feel normal. You guys stopped typing on the chat box. You guys okay, right? Mario, you took it the right way, isn't it? I'm sure you did, but everybody okay, right? You got my point, isn't it? Good. So we have the US dollar Japanese yen. Okay, so with the US dollar Japanese yen, we have a scenario where we have an average currently pointing at the average is currently pointing at 110.28. Okay, 110.28, and 110.28, unfortunately, it's more or less around here, which is under the green UFO. Okay, so again, you know, it looks beautiful, to be honest, but we're not gonna improvise a trade. We're just gonna act mechanically. 4-hour time frame means that this particular candle will close at 1 p.m. New York time, and that is 3 hours from now. Okay, so 3 hours from now you may want to come back here, because this moving average probably would have updated a little higher. Okay, and now this moving average may be lining up with 110.48, 110.35. Okay, and if that's the case, well, now go ahead and take the trade. Thank you so much, London Trader. Yeah, you know, hopefully it makes sense. So what do we have here? We have a similar scenario with the Great British Pound, where we have an average lining up at this price, okay, which is 132. Unfortunately, 08 to 19, you know, it's not what we're looking for. We would look for something just a little lower. So again, take a look at the pound 3 hours from now, because this would have updated, okay? London Trader is making the comment that he's losing the sound. Everybody, would you be able to, guys, confirm that you hear me well? Is the sound okay for everybody? Please give me a confirmation when you can, guys, okay? So Australian dollar, US dollar, the 15-minute time frame, what do we have? We have an average pointing at 0.7117, and we have 2 green UFOs overlapping each other around this price point. So I would like to propose that we look at these like a major mothership UFO, okay? So they are okay, got it. So it seems that the sound was gone for 30 seconds, but the sound is back now. Got it. Perfect, guys. Thank you so much. Not sure what happened. Everything looks okay on my side. Maybe I hit the mute button by mistake. Sorry for that, guys. So anyway, so we have the Australian dollar, US dollar in the 15-minute time frame, where what I was saying is that we have those 2 UFOs that are basically overlapping each other, and somehow we can treat them like they are one thing. Okay, so I was calling this mothership UFO, right? Is the big mothership, right? Is the big UFO, okay? So, you know, we're gonna treat this as one, because again, knowing what we have discussed before, knowing that natural Forex, which is decentralized, knowing that different brokers may have slightly different prices, if you were to place your stop below this UFO, you may end up having the Australian dollar to come down, stop you up, touch the next UFO, and then go to your target, and in your trading platform it may not even look like it touched the next UFO, because different brokers may have different prices. So we're gonna have to treat it as is one big UFO, which is gonna hurt a little bit the risk of the trade, but it will also increase the probability of profitability, because you have 2 UFOs working for you instead of one. So you have actually a better chance of success. Okay, so we're gonna plan on this trade. I'm gonna start thinking of targets first. I will ignore this target, because this target, this red UFO, will basically be our 1-to-1 safety target. So I'm just gonna act as if it's not there. I'm gonna go for the 60 and the 60-minute time frame. That should be my target. It's a target where we're gonna be talking about 71.55. Okay, 71.55 is gonna be my target. So back to the 15. Let me make a few notes. So final target. Okay, final target would be 0.7155. Then we'd have somewhere in here a safety target, which I need to calculate. I'll do it in a minute. And then we will have an entry, a long entry, where the green UFOs are, which I need to type the exact value. And then below the UFOs, we would have a protective stop, which I need to see exactly where. So let's make this text to be blue color so it's easier for you to read, and let's begin with the entry. So the entry is when you buy. And remember, when you buy from the ask, but the Australian dollar is a bit chart, so I'm gonna have to change for AUDUSD.A to be able to see what is the real price for this particular UFO. I'm looking at the top of the UFO band, I'm looking at the top of the circle, and notice how, like it happened earlier with the euro, we don't have anything, so that's gonna force me to change the settings from true to false to see what's available at this price point. And there is a huge collection of UFOs on top of each other. The one that is lining up with 71.19, it's going to be this guy here, okay, this guy right here, which is 71.19. Okay, so I guess you can see it. Let me freeze the screen for a second. Right there, 71.19. That's the value that we're gonna use. Okay, so again, even though in the ask chart is looking like a lesser probability UFO, in the bid chart, which is the most relevant chart in Forex, it does look as a valid UFO, so we will be happy to lean against. Okay, so entry will be 0.7119 and the stop is gonna be 0.7105 if I am not mistaken, because the lower price is 07 and I am placing a couple of ticks below. My stop will be a sell order, and because it's going to be a seller, I sell to the bid, and the bid is the chart, so I don't have to do any adjustment at all in this case. Okay, so let me move my text around 55 so that way I can be a little more visual for you. Let me do something like that. Okay, let me do something like this. So this is going to be more or less the trade that we have in front of us. We are going to be, let me move the text to the left as well, so I think it's going to be easier for you to read. We're going to be buying at 71.19 with a stop located at 71.05. So we're talking about 14 pips of risk. If I add 14 pips of 71.19, that gives me a safety target located at 33, okay, which, as I expected, is located a little before the red UFO. Okay, a little before the red UFO. That's where it's located. Okay, so you have your entry right here, your 1-to-1 33, and then let the trade play out, okay, all the way to 55. Be our plan for the trade. And those particular red UFOs that we have above the one located at 71.39.44, these obviously could be a little bit of a concern, but we will still shoot for the 55, and the reason why is because we are leaning against the trend. So we would expect those red UFOs to bring the price down and bring the price up and bring the price down and bring it up again and bring the price down and finally up. Okay, and if that's not the case, well, guess what? At least you collected half of the profit when you got to 33, so you know you cannot lose. And if the trade ends up as a small profit, then it'll be a small profit, but it's still high probability. So you know, it's a well-balanced one, probably going to happen more slowly compared to the one we experienced with the S&P, because we have many red UFOs, where with the S&P we had no UFOs overhead. Okay, which was very cool. But anyway, this is what the Aussie dollar is giving us. So, you know, that will be your ultimate decision to decide if you want to take it or not. With real money, paper money, of course, you'll decide. But that's the plan. Okay, guys. So anyway, my friend, we surpassed the top of the hour. So I believe it would be time to conclude our session. Let me take a quick look to the comments box very quickly here. Yep, so it seems it's all good. It seems I responded all your questions, guys. So again, guys, super pleasure to join you here for this 1 hour of trading. Super pleasure. We'll see you soon. We'll see you on Thursday, to be precise. And on Thursday, we'll be killing it now with options, because I'm super excited for Thursday, since we completed our 7 sessions over the Sundays to sharpen our skill on options trading. This session on Thursday, it's gonna be active, guys. We're gonna be building debit spreads, credit spreads. We're gonna do a bunch of things, and hopefully it's gonna be a lot of fun. Okay, so guys, see you then. Thanks for the questions. Thanks for the teamwork. A pleasure to see you here, guys. Keep up the good work. Okay, and remember, emotions under control. Rules is what matters the most. Be professional, my friends. I'm counting on you. Bye bye. Take care.